And the end of the music and the legal words and not having to have me sing like yesterday means we are ready for another halftime report. Markets rallying, rallying strong. Massive intraday reversal yesterday, continuation today. We'll break that down from a technical perspective. And then, of course, on a Friday, Frank charts, one of the most popular segments that we end every week with, as Matt and Frank bring us some charts at the end of the show and a few stock earnings analysis in between. We'll break it all down. Happy to be joined with you today, gentlemen. Matt, Frank, how you doing today?
I'm fantastic. He said Matt Frank,
You're
right?
both so excited.
I
You
didn't
just
know.
can't
I
really
didn't know
set
what
us
to
up
do.
for failure there.
I honestly didn't know what to do there, Frankie.
I didn't either. I was like, well, he said my name last. I'll just roll with it. And you said he said my name first. You'll just roll with it. But excited to be here. Nice to see a little bit of buying action here after the week that was. But yeah, vicious intraday rally yesterday, Mark, and a lot of follow throughs. It probably hitting a few short stop losses, I would suspect.
I never feel bad for bears. It's tough for bears. It's tough for bulls in these volatile conditions, isn't it, Matt?
It is, and it's going to be volatile. It's going to be volatile for the foreseeable future, and when that volatility slows down, I think everybody will be able to see it and probably appreciate a little bit of slowing momentum, both on the bull and on the bear side, to get us a little bit more constructive technical patterns. But you got to also appreciate the rapidness of the recovery here from a technical price action. And that's where I want to start here today, is that 30-minute chart, that my favorite time frame from an intraday perspective, that 30-minute chart. And as we were discussing yesterday, kind of the beginning point is always going to be from an intraday perspective. Then you really kind of build off that. And the double bottom of 4,100 that we detailed yesterday kind of did prove out. Nice little breakout there, continuation all through the overnight action. Not a lot of volatility on the overnight action, but as you started coming into the early morning hours in the east there with the Eastern Standard Zone in the market open, you started seeing that volatility pick up again, and it was on the backs of some headlines that are coming out regarding Ukraine, and obviously the Ukrainian situation is a very, very volatile and uncertain moment in time that is going to take some time, no doubt about it. But there was some reports that came out that Russia was open to sending a delegation to discuss with Ukraine the potential for Ukrainian neutrality, and Zelensky was open to that to a certain extent. So market's running hot on some hope here. But I think what Frank said, and I think what you're going to allude to here in a second, there's a lot of short covering going on right now in this marketplace. And you're seeing it over the last 2 days. And when the market does go through a little bit of a short squeeze, which is, the market basically buying back all the shares that they have borrowed to sell to the open market, that's what a short is. Well, as you go through the process of closing those trades, you have to buy back the position. And as you buy back the position, it forces others to buy back the position. Then eventually the brokers will force you to buy back the position because you're actually utilizing their money. And so you have this massive short squeeze going on right now. The question is, can this type of price movement create a reversal pattern in the market that can be a little bit more consistent? I think we're a little early there. I do think we're a little early there. And especially when you come out to these longer time frames, such as the daily chart, again, you got to like the market recovery on the bull side over the last couple of days. It's been a really powerful market reversal. But again, is anybody here shocked at the volatility?
No.
If it was down, would you be shocked at the volatility?
No.
No, that's the market we're living here. And even with the upward movement in price here today, I don't know about you gentlemen, but I'm still a little skeptical that this is ultimately going to be the bottom. I feel like we're going to find some resistance here. And if the market does recover, I think it's going to be not on a resistance breakout, but it's going to be on a support bounce.
Frank, ever since Omicron and Thanksgiving, I mean, candlesticks have not been boring. You are a technician. You are a self-proclaimed, technicals first, technicals second, technicals third. how do you navigate big, huge, massive, gigantic candles just from a big picture standpoint?
You dig deep into the underbelly of the market, not the underbelly, that's your thing, but you basically go through everything to find things that are going to work. I said it a lot this week in a couple different places. It's the stop location that becomes a problem, because if you go tight, these big candles are just waiting to knock you out, right? But if you go loose, you have a horrible risk to reward ratio. So you just have to take good quality shots on things that actually fit those two criteria. Hey, I'm comfortable with that stop. I'm comfortable with the risk to reward. There's a lot of things that are going to not be in one of those two camps, and you just have to have the strength to say there will be other opportunities, and maybe not on this one. Yeah.
On that, what you're talking about. You take a little look at the industrial sector here today, right? Industrials that so far have not been very good. It's been very choppy over the course of the last couple months. And, industrial index itself, we have right there, I believe at negative 40. I believe we have somewhere in the negative 40.
Yep, I believe
so. So the sector itself is not very good. Obviously, it's an improving condition over the last couple of days. You got a couple different things that are firing off though in this space. Take a look at Lockheed Martin, for example. You got to love the breakout here at 400. It's something we've talked about in the past. I believe Lockheed was on a report over the last couple of weeks. But if you're waking up today to Lockheed at 413 versus the breakout at 400, you don't have a reward to risk ratio. You have an edge, right? You have a probable edge. Would you agree with that?
Yes, I would agree with that. Yeah.
Right.
I think most likely we continue to go up.
But unless you're day trading, and Frankie, I think you're talking from a swing trader's perspective, correct, right? So unless you're just bar by bar momentum day trading, that pivot point is 395. That pivot point where you would have to place a stop loss is at 395.
Yep.
And do you have a potential of Lockheed going to 450?
No,
maybe, but I mean,
but that's a lot to ask, right?
Exactly.
That's a lot to ask. And so it just becomes, it's a good example, right? And there are always things out there, but this is a really good example where clearly a bullish signal, right? I expect it to work its way up and test those old highs. And to be quite honest, 450 doesn't surprise me all that much, but I'm scraping to get 2-to-1 at 450, breaking that all-time high, continuing this momentum. That just doesn't feel like a long-term path to success, right?
Well, and let me ask you a question. How many scenarios exist between now and Monday for Lockheed to come right back down to 400?
A lot.
A lot of them, right?
Yes, there's a lot of ways that could work. Yeah.
And so in your head, you're like, yeah, you got to love the candle. You got to love the momentum. You don't love the reward to risk ratio. And then you're thinking about, oh, man, well, there are 72 hours between now and Monday morning that there is a lot of geopolitical things that could occur. And so I just wanted to give an example of kind of what Frank was talking about there.
Yeah. And that's a good one. Yeah. And you're seeing it all over the place, right? That's why I hate this market. I don't really hate the big candles.
RTX, same thing, by the way.
Yeah. There's a million, probably a little bit of an exaggeration, but that's what I don't like about these. I like the candlesticks and I like the movement, but it's just so hard to, at least with the way I like to do my stop losses, it's really hard to make things work. You got to be patient and you got to be willing to pass and look for other opportunities. They're out there for sure. And there always are some, right?
Well, and if you caught the breakout of Lockheed because you were ready and you were rocking and you were prepared, fantastic. We're not talking about that's just trade management. We're talking about new position, right?
Yeah, exactly. Yeah, if I were in it, if I played the break of you're just today's high this morning, for example, because like you said, I know a lot of people here at Tackle have had this on the radar.
Yeah.
And so if I'm in it, I'm like, yeah, cool. I'll take this $13. I'm glad Frank can't get risk to reward. Sorry, bro.
Yeah. The reason you can't get a reward to risk is because they were front running. Yes.
And hey, right. I'm happy for you if you did. So no hate.
No doubt. But back to the broad market here very quickly, looking at the daily chart again, you do have some patterns changing. This wick so far has to be looked at as a little bit of a fake out against that 42.50 type breakout. And so you're back into the range, but now it's just a matter of, okay, do these resistance areas, how powerful do they actually become? You know, the 20-day moving average, the 200-day moving average right there. We obviously know the 50 is going to continually come down as the price hovers a little bit lower here over the next little bit. I think it's constructive. There's no doubt about that. I think it's very constructive, and there is some positive, data coming into the market. But once again, the market's running on a hypothetical scenario coming out of some neutrality out of Ukraine. What it's not focusing in yet is the Fed and what the Fed's going to do in March coming up here in just a couple of weeks. So there's a lot the market's going to be focusing on from a macro perspective over the next couple of weeks. I think the volatility is going to be here for the next couple of weeks, quite frankly.
Yeah, I think that's the most likely outcome. And I have no objection to, taking some calculated shots here, but
of course,
to call this and I think you're in the same spot. It just going to have some work to do. What I'm most interested in, to be quite honest with you, is what happens when we see sellers step back in, wherever it might be, because there's a lot of stuff, right? On top of us right now. What does that look like? Is it aggressive? Is it fairly mellow? Does it work back into a rising 9 EMA that can give you some confidence that, okay, well, now maybe we're trying to show some reversal characteristics? That's always the most important one, in my opinion, is that first test, because it's been easy the last 2 days, right? At least especially today from a buying point of view. When I have to decide, okay, am I really going to hold Lockheed to those highs, or am I going to take those profits on signs of weakness? That's the true test, in my opinion.
Well, and quite frankly, I think the volatility is going to depend on how that Ukrainian-Russian situation pans out over the next.
Yeah, that can mess up week. Any of our chart analysis.
Yeah. Well, and it's just the interpretation, how the market interprets it, right?
Correct.
If the market continues to interpret that the news coming out of Ukraine and Russia is a step in the right direction, the volatility, the market's not just going to skyrocket up, but what will happen is those candles that are expanding their ranges right now will start to contract. And as those candles start to contract, it's because the market is not overreacting to the given news. Right now, one of the reasons the market is so volatile is you're seeing massive overreaction to either the bull or the bear side, given the interpretation of the news. We want to see that interpretation slow down. We want to see a normal Tuesday. That's what we want to see. We want to see a normal Wednesday. We want to see a give me a doji here, like any doji. Give me a spinning top doji. Give me a morning star. Give me an evening star. Just let's see the market volatility subside by those candle widths contracting, because again, the news is hot and heavy. It's coming out every second, every moment of it throughout the entire day. The market is overreacting a little bit. It's kind of like when you're driving a car and you kind of swerve just a little bit and you realize it and you overcorrect yourself. Well, the market's overcorrecting itself to the volatility of the events. We haven't really seen any changes to what's happening in Russia and Ukraine right now over the last couple of days. It's just, you're seeing the way it's interpreted a little bit differently. But once again, you're seeing the same volatility, if not even slightly more volatility right now. We need to see that subside a little bit, in my opinion.
Absolutely.
It is fascinating theater from a market geek perspective. Just fascinating.
We're living in a time that history books will write about.
Yeah, no. I mean, this is one of those times when you go back, and I reference in my Cash Flow Vikings Trading Lab these historical studies, and I was talking about it here yesterday on the halftime report. This is one of those time periods when people are trying to analyze future craziness.
This will be one of those moments.
This is one of those times. It's like, well, remember at the start of 2022, this is the price action we saw, and this is one of those time periods.
When the market's at 8,500 in 10 years from now, and we're looking back analyzing the historical volatility, we'll be like, hey, do you remember 2022? Well, in comparison to 2020, that's what we're going through right now. There's no doubt. And it's just a matter of letting it subside.
Will you give me a quick peek at the intraday chart map? Because one of the things that you see in these intraday rallies, in any time frame will do, right, is you see these surges, right? Like 30-minute chart's a great example here. You cross some moving averages, and there, Frank, look, there's that moving average pocket that we were talking about on the Coaches Show a few weeks ago, and you came up above the 50 there, and they just surged to the 200, and then you pause, and then you have another surge. It's fascinating, the intraday price action, where surges, pauses, break, surge more. What are you seeing here? I mean, we're clearing a lot of resistance levels, Matt, on intraday charts, and certainly have the momentum and the moving averages acting as backup along the way. But is there? I mean, break it down for us. Break it down for us.
Frank, you want to talk about the power of moving averages?
Of course I do.
Yeah. Well, was the question to me or Frank?
It is to whoever has wherewithal to start talking.
Well, what I'll talk here, and this is the power of moving averages, and moving averages are so important because algorithms have to be programmed based on math, and and a lot of these algorithms do use moving averages, and they use them on different time frames, right? They use them on different time frames that fit different styles of trades, whether you're talking scalping and you're looking at very, very short-term charts, and those algorithms are using the same time frames, but just on the shorter time frame chart, time frames to the moving averages, 9, 13 on the EMA side, or the 10, 20, 50, 200 on the SMA side. The difference is the time frame they use. So, if you have a scalping system, you're going to have something programmed on very, very, very short time frames. A day trading system will be programmed based on 5-minute, 15-minute, 30-minute charts, 60-minute charts. Swing trading will use a combination of intraday versus daily charts. And so when you're looking at these moving averages and what Mark is talking about, as you see kind of the initial reversal analysis with the double bottom, double top, or where did you see the struggle in that recovery? The struggle occurred at that 50-day moving average, where not 50-day, but the 50-period moving average, where you saw a little bit of, flag base pattern. You saw a little high base here. Once it broke out, there was nothing to stop it until you saw it come into that 200-day moving average. And then you saw that consolidation there. Once it breaks out of the 200-day moving average, it's just a stepping stone right back up. And so as the market is trying to recover, there's going to be a lot of different forms of analysis it uses. It in identifying where those resistance levels, which are key target points to start the selling process. Well, in those market recovers, when you deal with the pockets of resistance, once one moving average is achieved, a lot of times it will come up into the next one up until you recover all of the moving averages. And then you're basically walking up the stairs in terms of trend analysis. And so understanding how these moving averages can stop the price appreciation and act as a resistance level, and then once they break those resistance levels, they now start acting as a support catalyst for it. It's just one of those techniques technicians use to understand this market recover and where these price levels can go. Once again, once you achieve them all, it's now just a matter of going back into your normal trend analysis. Or number two, something you and Frank will constantly do is go out to the longer time frames to see, okay, is there anything left to stop it, right? Going out to the 1 hour chart, you've reclaimed all those moving averages on the 1 hour chart. So you got momentum there, and there's really nothing to stop those day traders from punching up until you start getting into the longer time frames. And that's the daily chart. And that's why a lot of technicians today are probably looking at this market and they're saying, okay, fine, the market looks like it's going to recover. And where does it look like it's going to recover to? Well, it's recovered on the hourly charts. It's recovered on the 30-minute charts. It's recovered on the 15-minute charts. It's recovered on the 5-minute charts. It's recovered on the 1-minute chart. It hasn't recovered on the daily chart yet. These are where those moving averages are. And so it would not surprise me in any capacity to see this market kind of work its way back up as the day trader, unless there's some variable that comes out that can stop everything. We know that can happen. But from a pure price action perspective, this market does want to punch back up into these higher moving averages on the daily chart. And so it wouldn't surprise me to see a little carry through coming in over the weekend, coming into, and again, there's 72 hours between now and next Monday. Anything can transpire, but from a pure technical perspective, it looks like this market wants to come in and wants to come into the daily moving averages. 4,400 is the zone, but you're really looking at about that 4,420, 4,450 zone. It would surprise me to see a little bit of price action coming into there. And then we can talk about what that pattern looks like. And then we can talk about where those swing traders come back in, because right now this is a day traders market. That's what it is. It's a day traders market. This recovery is really good for the long-term investors. Everybody loves a little bit of a pop and run for the long-term investor accounts. Everybody's holdings are doing a little better today than they were yesterday. That's a positive step. But for the traders, for the active traders out there, again, Frank said it earlier today, they're going to take their shots. Traders are always going to take their shots. There's always a trade. You just got to go hunt a little bit longer.
Yep.
I did my hunting here today, Frankie. I did it earlier today. You just got to hunt. You got to be a little bit more patient. You got to be a little bit more systematic, and you got to be a little bit more selective in what you're looking for. But there's trades to be had out there. There are no doubt about that. What I'm talking about is increasing your bias to the market, increasing your confidence in the market, adjusting what the ranking of tackle trading would be for the market. And that starts with the decreasing volatility, working our way back up into the 200-day moving average. And then for the love of all things good, give me a high base against the 200-day moving average and let us rock.
That would be all right. I'll take the deal.
I think we could all sign up for another day, and then give me 3 days of nothingness. Like, give me 3 days of the market just doji a little bit, slowing momentum, and then pop against that 200 on the daily chart. Then let's rock.
Yeah, indeed. We look around the other indices. Nasdaq actually underperforming a little bit today. I believe it was outperforming a little bit yesterday. Similar price action. Do you see anything different? I mean, it seems like for like 6 weeks it's been the same chart, just different gyrations, right?
Yeah, it's worse on the downside and worse on the upside. I like the S&P slightly better.
Yeah, no, and small caps, which you have commented on.
And by the way, yeah. Nasdaq, you're looking at this index here. This looks better than the individual components do.
Yeah.
Yeah.
Okay. By a mile. By a mile. So when we talk about it's worse on the downside and on the upside, meaning it goes down more and then it goes up less than some of the other counterparts in say the S&P. I did my scanning in the Nasdaq, guys, and legitimately the only stock I found was a stock that got bought out like 6 months ago. Like, I was like, look at that breakout. We finally got a clean breakout.
Zynga's chart looks great, right?
Yeah, all we did was a buyout from 6 months ago. That's fantastic. That was the only chart I found on the breakout. So and then I'm like, hey Frank, what about this chart? And Frank's like, dude, that got bought out. And I'm like, damn it.
It's not pretty in tech right now.
Yeah, so the actual index does look better than the individual components, and I do think if the index does recover here, and again, the index will recover if the S&P recovers. Can we agree with that? It just maybe won't
to some extent or another,
as good. There are some pretty compelling potential reversals that have gotten slaughtered over the last not 2 months, but over the last 6 months, that if we do start to see a little bit of volatility slowing down here, there could be some opportunities coming down the road a couple of weeks from now.
Yep, I would 100% agree with that.
From deep value type stuff, guys.
No, I mean, and those great reversal patterns. Tyler and I talked about this on the Coaches Show on Tuesday. That listen, when you get these deep situations, it oftentimes, I mean, the V shapes are so uncommon in deep reversal situations. You usually see consolidation, and you got time. You got time and you got patience. Russell's doing his best job to stay in his current consolidation pattern.
I like the double bottom at 1900 on the
Russell.
I'm trying not to.
Textbook?
I'm trying not to. Honestly, I am, but I kind of like when I see a double wick bottom. I don't know about you technicians, but for me, that's algorithms. That's algorithms spotting an area on that chart that they just have program buys. Because when I see like a body bottom, I love body bottoms too, but wick bottoms, and again, the wick bottoms is just when you see these long tail wicks kind of come in versus the bodies here. Again, both are fine. I just have a philosophy that when you see wick bottoms on long wick candles, that's algorithms, 100%. and you don't want to fight those algorithms. And so you do have slowing momentum here. Unlike what you're seeing in the S&P, unlike what you're seeing in the Nasdaq, I do feel like you have slowing momentum in this area of the marketplace over the course of the last few weeks. When you look at kind of the volatility here versus comparison to the volatility here to start the year, this is kind of the Omicron situation. And then obviously to start the year with the Fed pivot and whatnot, look at that volatility. Now look at everything over the course of the last couple of weeks here. You're not seeing a violation of support, unlike we've seen in the S&P, unlike we've seen in the Nasdaq, unlike we've seen in the Dow Jones. You're seeing a double bottom. You're seeing a market that is consolidating. It's choppy. Don't get me wrong. It's choppy between 1900 and 2100. We're talking about a 200-point range against a $2,000 index. It's got a 10% neutral range. I mean, it's choppy as all get out right now. But again, look at what was transpiring. Now look what is transpiring. You got a little bit of a double bottom. You got that 2100 resistance zone here. And now what's occurred over the last couple of weeks with the consolidation, again, it's hot and heavy here. It's the 10% range on an index. That's nothing to sneeze at. But I do see a scenario where if we do recover here and ultimately we get back up above 2100, well, you just reclaimed a very, very, very important resistance zone from a historical perspective at 2100, but also look at that 50-day moving average. Look at that 50-day moving average just show its teeth right there. Look at it just drive down. Well, if we reclaim 2100 off this improving condition, when we ultimately start that bull run back up into 22, I think that's a very, very positive step in the right direction for the small caps that don't have to worry about everything that's happening in Europe right now, that don't have to worry about all the regulations that are going to be coming on Russia and Russian allies that are supporting the horrific situation that is occurring in Ukraine right now.
We saw that in the trade war.
We did.
We remember 2019, 2018, but particularly in 2019, during periods of the trade war, you saw, in times of volatility where, even companies like Apple and blue chips and this and that, you saw weakness there. You saw relative strength in small caps. So I like, that just triggered that when you said that, man. It wouldn't be surprising.
Don't get me wrong.
The same.
They still got to deal with the Fed.
Yeah.
They don't have to deal with Russia. And unlike Apple does, Google does, Microsoft does. A lot of the S&P 500 components do. A lot of the Nasdaq components do. These big, multinational companies, they certainly do. Yeah, that what goes on geopolitically has to be part of the evaluation. When I'm dealing with a company that just does business in America, sells business to Americans, you don't have to worry about as much of the geopolitical because they don't deal in those countries to a certain extent.
It's the trade war playbook. You want to look at any sectors, Matt? I mean, they're all rocky, like right now. I mean, it seems like it's just like it's a buy everything rally right now.
It is, and it's a short covering rally is what I personally would label it. But again,
Yes.
There are buying happening as well. Obviously we're dealing with a lot of downgrades last week. You're probably dealing with a little bit of some upgrades, but for the most part, I don't feel like patterns have shifted this week in comparison to the last week. I just feel like we dealt with a couple down days. Now we're dealing with a couple up days. And so you're dealing with the exact same scenarios with the exact same volatility. And so I don't know if you're going to see a lot of radical upgrades or downgrades based on the price action. I think for a lot of us at Tackle, we see it as an improving condition, but we're not there yet, right? We need to see some follow through here. You can't start the week getting smacked in the face and then end the week on a short rally and be like, ooh, it's all good. Like that's no, it's all part of the exact same analysis. And so, when you're looking at some of the aggressive sectors, obviously tech is dealing with the same volatility as the market. Communications has just been absolutely garbage, for since the $70 break there. That's probably over, and you're probably going to see a little bit of a tick up into the retest of that $70, but that's just a bearish retracement. And so I don't think you can upgrade the communication space simply because it got beat up so hard that it's now coming back into resistance. And so again, that's what I'm seeing across the board from a sector perspective. When you look at discretionary, a little bit of the same thing. You got to like the beginnings of a potential recover, but I don't think any technician would start painting reversal analysis on the discretionary space yet. You still have increasing momentum to the downside. Again, the last two candles notwithstanding, you still are punching down. This still technically is a lower level of support in comparison to the previous one. So you're just dealing with a little bit of the same volatility in the aggressive areas of the market. So I don't think you're looking at upgrades or downgrades there. Obviously a tackle will have an extended conversation. I'm looking forward to getting everybody's thoughts, especially on a week like this. There's so much news that is coming into the market, and it's so much based on interpretation that it's going to be very important for us to have a little bit of a meeting of the minds and sit down and have an open conversation of exactly what Greg Holmes is seeing, what Emily Murray is seeing, what I'm seeing, what you're seeing, what Frank is seeing, and not just what we're seeing from a charting perspective, but what we're seeing from an individual component, how this news is impacting all of the market instead of just say one sector, one market index. Because again, we know the indexes and the sectors paint a picture, but any active trader knows that picture is different when you look at the components of it. Would you agree, Frankie?
Got to look under the hood.
You got to look under the hood. You got to look under the hood. When you're looking at the cyclical areas of the market, basic materials is choppy. It's still volatile. You obviously have what's happening in gold and the metals and minings, and then the concerning areas of the market being specialty chemicals. But once again, from a pure price action perspective, this is kind of what I've been talking about in the last 5 minutes on these sector rankings. Look at where we started last week. We started here, we ended here.
Yeah.
Go to the weekly candle. You like the picture, right? You like a hammer more than you like a doji. You like the picture slightly better, but from a pure ranking perspective, we're still underneath the 50-day moving average. We're still underneath the 9. And so you like the picture of the week a little bit better because it's rallying to end the week versus what it started, but you're at the pretty similar price levels to end the week as we started the week. And so I'm not sure you're looking at a lot of upgrades or downgrades. The rankings of tackle last week were pretty accurate, actually. And so again, I think from a rankings perspective, in the aggressive sectors and the cyclical sectors, you're really looking at probably a little bit of par for the course here as we look to shake off some of this volatility. Now, once again, there are a lot of scenarios next week where you might have some aggressive changes in rankings. For example, let's take a look at tech again. If tech comes into the 200-day moving average and consolidates for an entire week, I promise you every single one of us will be talking about the high base breakout.
Yes.
Yep.
Every single one of us will. And so it's just one of those moments where you can see some scenarios that are really positive for the market from a technical perspective. Don't get me wrong. The dark clouds are still there. I'm talking pure technicals here, but you can see some scenarios, but for those scenarios to actually exist, you need to see some of the news that is creating the volatility subside. That's the importance of the two-step here. Again, the market recovery is positive, but we need to see a secondary pattern here that shows a little bit of slowing volatility, a little bit of slowing momentum, so we can see exactly where this market truly wants to go.
Indeed. I mean, well said. I mean, anything to add, Frank? I thought it was pretty.
No, I mean, pretty much spot on. I would agree with that. It seems like you've seen plenty of movement, but a lot of things aren't too much different than they are. You're seeing some nice moves out there in some places. No, I think it was Brandon who I don't know when you had your asked your question, Brandon. He just asked why still stocks are moving so much. I don't think there's any particular news. Mark, did you get any particular news on still? I think it's just kind of a product of the type of thing that they are in
I
this
got all
market.
kinds of speculation from a lot of different people, but
I got a lot of speculation too. But when you do take a look at those still companies, look at U.S. Still here. And a little bit, Vel came out with an earnings report today. They were pretty good, even though they're metal and mining, not exactly still. You are seeing a little bit of that type of movement happening across the marketplace. You also have some inflationary concern. Obviously, the PCE report came out today, was a little bit high. The PCE report is one of those reports that the Fed really relies on, very similar to the CPI report that came in higher than expectation. And obviously year over year was higher. So inflation is certainly driving a little bit of this, and obviously the overriding geopolitical concerns are usually a benefit to metal and mining and these types of industrial metals. So you have some good positive tailwinds happening here for still. The reason, and Frank might have a different perspective on this in Frank's charts when we get to it today, but I was looking at still today for a potential. Is there something here we can add to the option report, to the stock report? Is there something here we can add to, say, Frank's charts later? And I had the same philosophy that Frank had earlier today, and he was saying there's a lot of good price movements, but it's hard to find the reward to risk plus the edge right now. And so it's just a matter of, on US Steel, for example, it's probably ran too hot, too heavy going into the breakout, because again, we're not talking about a consolidation 24. You're actually coming in from the low price of 22 here. I mean, that is a big time movement with a lot of overhead resistance between 27 and 28. When you're looking at Still Dynamics, that's TLD, Tackle 25 component, just a darling of Tackle 25 and a darling of Tackle Trading. Same type of conversation here, an improving condition in Still. But again, coming over the last 2 days, it is pounding the table up. Now, the question for me isn't about the breakout that it had against 65. It's really the breakout that it might have next week at 69, a little bit hot and heavy running into 69, but I got 69 as a pretty important resistance level on the weekly chart. It's kind of that right shoulder king's bed type breakout that we can see a little bit of a pop from a momentum perspective. Again, you know us at Tackle, we're never going to chase things. We like to see a little consolidation to justify the type of price movement. Show us you can handle that 69 price movement. Show us the market is going to aggressively sell you at 69, and then we'll look at it. But you got to like what you're seeing in Still Dynamic. You got to like what you're seeing in US Still. Cleveland Cliffs, a little bit of the same type of conversation. Obviously, we're talking about Still Dynamics up towards the highs. But here in Cleveland Cliffs, a little bit more of an aggressive, not as fundamentally strong as, say, a Still Dynamics, but a little bit of a running on the same theme here. Cleveland Cliffs, popping off that $18 drop, popping all the way into the 200-day moving average. And that 200-day moving average just a week and a half ago stopped a very aggressive freight train coming into it, stopped it on a dime like an Allen Iverson crossover. Now you're up there against that price threshold again. A breakout here, I think you got to be looking at 24. At a minimum, I think you got to be looking at 24. So yeah, I think you got to be liking what's happening in Still right now. A little bit overextended from an active trader's perspective. You'd like to see a little bit of a consolidation here, but you got to like what you're seeing in Still.
Yeah, absolutely. And just, it's amazing what just one or two little inside candles can do for those charts,
takes,
right?
Baby. That's all it takes.
Cleveland Cliffs, come back down. I don't want to get called.
You ain't getting it. Stop it.
I don't get called
You've
out.
been calling. We have too low prices right now. Stop calling for lower.
Listen,
we're in recovery analysis.
I love Cleveland Cliffs. It is a cash flow darling. And I think
there's some good ones in Still. Cash flow still has a lot of the cash flow that gold has. You like Still because
with much higher volatility and bigger premiums.
Okay, well that's why Barrick Gold is a Tackle 25 component, and why Cleveland Cliffs is a DSM component.
Yeah, I know.
They got to grow up a little bit. They got to grow up a little bit.
Speaking
Still Dynamics Still Dynamics is beautiful fundamentals. So
listen, Cleveland Cliffs, I love you. I love you. I love you. Oil.
You're not getting 18.
I just had 18 yesterday.
You're not getting it.
Why can't I get it again?
What, you want it for 3 times in a week?
Listen. I don't know if I'll make a penny directionally with Cleveland Cliffs, but I will keep doing cash flow on it.
Go lob your 18 put and call it.
I'm going to do all kinds of stuff, as I plan on doing with oil. A little bit of sell off in oil today on who knows what. Give peace a chance. This, that. We've just been in a different volatility pattern, over the last, ever since you pointed it out, at the start of last week on the halftime report, just different feel to oil. And we've definitely in the, midst of Ukraine had that volatility heighten even more. Make sense of the chart for me, Matt.
It's okay. Let me dive into this one. It's a volatile beast out there right now. But again, when you're talking about what's been transpiring over the last 48 hours in Ukraine and how much Russia has to do with the commodity markets, guys, the Russian economy is the commodity market. Like, that's all the Russian economy is the commodity market. And so when you have Russian geopolitical situations and you have sanctions going on Russia, obviously you're also going to see a little bit of that increasing volatility here. And as you can say in the marketplace itself, anytime you see increasing volatility, it is a thorn into the technician side. Technicians, and you guys have heard me on the halftime report for now 5 years, basically talking about how I don't like increasing volatility at top end of charts. It often leads to reversal characteristics because technicians who plan trades off probability analysis can't necessarily do that as well when you deal with this type of increasing volatility. And so, and plus, whenever you see a very consistent trend and then all of a sudden you see that trend increase volatility, it's because a lot of new situations is coming into the market to drive price action. And so that takes a little bit of time to snuff out as well. I said yesterday, or earlier this week, I said the only thing we knew as of right now is where that next trade was, breakout of 95 going into 100. I said yesterday, it was too volatile. Nailed the trade. It just left everybody behind, right?
Unless you were up at
I don't know about you, but I wasn't futures,
trading futures that
I was sleeping. So it left a lot of traders behind. After that, I think this one's a tough one to catch from an active trader's perspective. Now, again, I still think you're looking at these top ends. You saw it again here today. So if you are looking at oil, I think what has transpired is the volatility has changed the trigger a little bit. Whereas we were looking at 95, I do think that top wick that we were talking about last week, that top wick about the 95.80 level, you saw a little consolidation right here that kind of confirms that level as something to be a little concerning. And so now the trigger, if you are aggressively trading the trigger above 95, driving it back into 100, that doesn't necessarily work as well now, given the fact that you now have a resistance level intraday that you got to track at about, 95.80. And yes, I love a day trade between 95.80 and 100. I do.
If you're day trading, that's a decent little window.
Beautiful, right? But for a swing trader, man, I got to come back out to this daily chart. And for a swing trader, I have to have confidence on projecting where that price level is going to go on that daily chart, not just the intraday chart. And on the daily chart here, there's no edge. There's no edge. You got volatility both sides.
Yeah. The fun, easy run is over, I think, for at least the time being, until we clear up a little bit, right? That chart was really smooth sailing for quite some time, got us all a little bit on the spoiled side. Just going to have to let this one play out from a swing point of view. Intraday, I'm with you, Maddie. I mean, that volatility is great if you're intraday playing, crude futures. If you're more traditional swing trader, you're probably, consolidate here for 2-3 weeks, then give us a breakout above that 96 marker, and then we'll scale in into the 100 breakout point, Nad, when that happens, right? But that's a couple weeks away, and maybe well, with this volatility, it's probably asking a lot right now.
Well, and there's still energy stocks out there to have, let crude oil and crude's going to have an impact on that volatility as well. But I still like some of the charts in the energy space, and as long as crude doesn't start puking up, I think you can still be fine with energy plays. Now, if crude wants to break 90 and come all the way to 85, those energy stocks are coming down too. So keep an eye on 90. Keep an eye on 90 on crude, make sure that holds. But I still think there's some pretty decent energy plays to be had out there.
No, Bitcoin hasn't exactly participated to the degree in this rally in the sense of going crazy, but it has stabilized a little bit here at the bottom. Once again, are we back in the like where we were a month ago? Just got to see, got to be patient, got to be this, got to be that, right?
Yeah.
Is that where we're at today, Frank?
Yeah, I mean, it had its chance when it was kind of up there 2 weeks ago, pinching, between the 9, the 200, and the 50 in the middle. After giving that back up, you're back down to support bounce mechanics, but now you've got all this stuff on top. All of that momentum that it fought so hard to reclaim is gone, right? At best, it's bland momentum now. At worst, it's, negative momentum. So I think at this point in time, unless you're purely playing the support bounce, in this 35, 36 range, which I mean, some folks clearly are, right? That's not my style, but they clearly are. At this point in time, you're back into if it breaks back above the 200, back above that 45, 46 range, then we can talk. Maybe something develops between here and there. If we give out this floor, you're back to, wow, are we going to 30, right? Not very hard to see that happening. So this is a type of chart that I think can get us traders into trouble, where there's clearly not an edge one way or the other. And so my bias wants to come through. And the, best advice I can give there is just don't try to trade those charts. Put them on your watch list and wait until you get clear signals, because it's one of those charts, I think.
That sounds like reasonable advice. Take a quick pick of gold, and then we'll head into stock chart. Gold's been getting a geopolitical bid for a while, much like oil, right? You had that big surge. The last 2 days, Matt, the candlesticks on crude oil and gold mirror each other quite a bit here. Any concern on gold right now if it breaks this little short term, repeating what gold has done so many times to us in the last year?
If this market recovers, gold will come right back down.
Yeah.
So it's one of those things where you're like, I like gold, but I also like the market recovering. So no, I think gold maybe got a little bit ahead of itself on this little bit of a momentum. You are seeing a lot of the same type of volatility in gold the last 2 days as you're seeing in crude oil. In fact, they're kind of trading in tandem with one another right now. That's not usually the case for these two commodities. Over time, they will separate themselves. But when they're running on the same theme, and the only thing they care about today is the geopolitical situation. So oil and gold kind of running on that same theme. I think it creates a pretty nasty environment to be an active trader in gold. But then again, I don't know how many times we have to say it, like not a lot of people actively trade gold in terms of, let me put it like this. I know a lot of day traders that day trade gold. I know every investor that invests in gold or gold related products. I don't know a lot of swing traders that love trading gold.
Yeah.
Like it's just not that instrument for them. Like, for example, one of my mentors, Keith King, he loves day trading gold. One of his favorite instruments to trade is day trading gold. He loves investing in gold, but he probably doesn't swing trade gold. And it's because of what gold does through the 24-hour marketplace. A lot of times gold will perform differently based on different themes that will impact different areas of the marketplace throughout that 24-hour period. And so it's not exactly a consistent tradable instrument that we love trading as a swing trader. So there really isn't anything here because of the volatility to hang your hat on from a swing trader perspective. Like I was talking to Frankie about the 95.80 breakout on oil. I like that. Well, you see the same type of chart here. You get the same type of breakout against 1923. You probably will see that same type of price appreciation that you're seeing in oil. So I definitely see it. But again, if you're going to trade one, I would much rather trade the oil breakout and drive it to 100 from a day trade perspective instead of taking the risk here on gold from an active trader perspective. From a theme perspective, Mark, yeah, I mean, the volatility is something to behold, but I'm not too concerned about that as it relates to gold tradable instruments. Obviously, GDX is going to show a little bit of the same volatility, but I really like the recovery that's happened here in GDX over the course of the last month or so. I like the fact that it's reclaimed all the moving averages. I like the fact that over the last 2 days that, as gold is coming back down, GDX is coming back down. Well, what's now starting to form a support level? Well, that 9 EMA is starting to form, and it's choppy. It's not clean, but that 9 EMA is starting to form a little bit of support. And then when you look at the 30-minute chart, look at that wick double bottom right there around that 33.50 level.
Yeah,
and so
got that higher low coming in too after it.
It does. And so you got to like it. And yeah, I don't think you're going to give that wick on gold too much credibility. It was just one of those scenarios where, oh my goodness, Russia did invade Ukraine. Did that really just happen? Everybody in the world bought gold yet over the last 2 days. It's subsiding a little bit. The question is, as it does subside, does these support levels still hold? And so far, GDX is holding, and I think it's a positive step in the right direction.
No, indeed. All right, let's get into stock talk. What do you got for us, Matt?
Stock
earnings
talk.
season is starting to peter out.
Thank goodness.
It was not. This will
everybody.
not be remembered as the calmest earnings season.
We got
Facebook slash.
Oh my
I'm
God, Netflix.
Netflix. I mean, it was
man.
like when your stock had earnings, you're like, please don't Facebook me.
Yeah, please. Or it was like, please report on a day the market goes up.
Yes. Oh my goodness.
Right.
There's some truth
report
to that.
Today. Right. Report today. We got a couple to finish out this week in earnings roundup, though. We got 5 stocks: Intuit, Vel, Coinbase, Square, and Mark, one of your darling CNK. Let's start with Coinbase here. We talked a little bit about Bitcoin, struggling at the lows. Coinbase here, struggling at the lows. And Coinbase comes out with an earnings report that I feel is a really, really decent earnings report. And certainly if Bitcoin, because Coinbase is going to trade with Bitcoin, it's one of those proxies of Bitcoin. If Bitcoin holds that 35,000 support level, I think Coinbase should be looked at here a little bit, given the fact that they just reported $3.32 against an expectation of $1.95. That is a really, really good beat coming out of Coinbase. Coinbase also reports 2.5 billion versus the 1.9 billion in expectation. They do not provide guidance. I didn't really dive into the commentary because, again, I don't really care. Because again, the proxy of Bitcoin, but Coinbase comes out with a beat and a very impressive beat on both EPS and revenue. Once again, EPS numbers came in at a whopping $1.37 above the expectation. They beat the expectation better than half of the financial stocks did. So a really good beat coming out of Coinbase here today. Not a lot of pop though on their actual numbers, given the fact that Bitcoin has struggled a little bit over the last couple, week or so. But Coinbase coming in off the lows. Frankie, if we see some development here, obviously we're not looking to pick up Coinbase just off the lows here. But with this recent earnings report and the numbers coming out, let's say the market does recover. Do you have any interest if Coinbase starts working itself back up into that higher end of the range? Is this something that puts it on your radar? Is this still
it could? It could. I think it's a little early to say that it would, But if we do hold this support zone, it's kind of like the rut in the sense that got the support that held, and you kind of have that 50-day moving average kind of drifting down towards us, which is lining up with those old highs. So I could see a scenario that would also get us most likely above the 9 weekly, as well as some, that old bottoming price action going back, from, the early days. So yeah, I could absolutely see a scenario where, the right type of development happens. I think it has to happen without me from here to, 215 or so. But if we do break that 215 in a clearly, identifiable pattern, I could absolutely be interested, because there's a lot. If we can get through that,
pretty that's important resistance.
Yeah, there's a lot of reason for it not to get above that price point. And so if it can, I think you're going to want to respect that price movement.
I agree. It's on my radar in the sense that I like the potential double bottom, but when you're tracking reversal analysis, there's a step-by-step approach, right? Step one, you typically like to see some slowing momentum. Step two, you want to see a double bottom. Step three, you want to see a double top. Step four, you want to see the breakout of the double top. And then step five, which ultimately does confirm the potential reversal, you want to see that first bullish retracement that confirms you are in fact walking up the stairs from a trend perspective. And that would be that step five. So right now, you're really just looking at a double bottom. You're looking at support trying to hold here. The positive catalyst of earnings is certainly going to help it. But again, early in the reversal, but you know me, Frankie, I like putting things on radars, right? I like putting things on radars early in the process, but a double bottom. I love the 215 resistance level, Frankie. It's very important given the fact that look at the 3 times it tried to hold there. Then the resistance confirmed the importance of that level as well. 215 stood out to me as well, Frankie. Thanks for confirming that. Let's move on. Let's talk a little bit about Square SQ coming up, firing off the lows as they report a positive EPS beat, 27 cents against the 24-cent expectation. Revenue came in line, 4.1 billion, represented a 29% revenue growth year over year. I'm giving this an extremely lukewarm on Square. Again, impressed with the actual beat on EPS, not impressed with the revenue, and I am never impressed with a 29% revenue increase year over year on a company like Square post-pandemic analysis, when later on today I'm going to talk about Cinemark's revenue year over year, and we're talking about high-tech growth here in Square. So I if I had to grade this out, I'd grade it as a C+, honestly. Again, it's a beat, but I don't like the I don't like the combination of the revenue as well as the EPS. A lot of this is just market related, in my opinion. Square reported on a good day.
On a good day.
That's my take.
It kind of is like Snapchat reported on a good day.
They report on a good day.
Right. And
That's it. On a good day. They reported on a good day. So good for you, Square. Way to foresee that one. Let's move on to Bell. Bell comes in, it says 85. We came in on Bell at $1.42 versus the 85. And so 85 was the expectation. They came in at $1.42 after creative accounting. That went back down to 85. I feel this is a really good beat on EPS for Bell. Like the technical pattern developing, I'm looking forward to getting Frank's take on Bell here in a second. Revenue was very impressive out of Bell, came in at 13.1 billion versus the expectation of 11. This is a company, Frank, we have had on our radar for the last 4 months.
Yeah,
we've had Bell on multiple different scanner reports in this recover. I'm not afraid to put it on again after this earnings report. The price action is pretty decent as well. Frank, what's your technical read here?
This is one of those where I really, really like what I'm seeing, but there's a but. And that but is the 50 weekly that it has been battling now for 3 weeks. We still have a 18? Chance. Yeah, we still have a chance to close it today, but we'll have to wait and see how that one plays out. And that's not a surprise, to me.
I like it though.
Or to Mark. I like a break of the 50 follow through. Now for me, and I can just speak for myself, I'd be greedy, and I'd say I want to close above that 50 weekly and then some follow through. And that's asking a lot on a Friday afternoon, right?
And especially I think a lot of the market just wants to go home.
Sure. I think
Oh yeah, no.
there's
After
definitely
this
some
week,
people out there willing to say, let's call it good.
I'm
So,
not sure there's a lot of people being like, let's go pump Bell.
it,
I think
it,
there's like, let's go to the Hamptons. Let's go take a nap.
exactly.
Yeah.
Exactly. But
It's
yeah, I
been one of
like
those
the
weeks.
yeah, it has been one of those weeks. I like the break of the 200 and aggressively. If it wasn't for that 50 weekly, I would say above today's high would be an entry point. I just
I don't
worry
blame
about
you.
that. I just
I
worry
could
about
see some
that. So
front running. I think the real trade's the breakout of 18.
yeah,
I think that's the real trade. I think front running into 18 using the 50-day moving average on the weekly chart is a little bit of a trigger above that. But I do think the real trade is 18. You look at the weekly chart here. There's quite a bit of chop over here at 18.
yeah.
So
You got some
you
history
reclaim
there.
the 50. You could certainly front run a little bit. You reclaim the 50, fantastic. But I do think 18 is a trigger here. Above 18, I'm not necessarily worried about 19. That might play a role, but I think 20's got to be your target. And I think that's a legitimate target for something like Bell. So if this, like, I don't know about you, but I'm not feeling the need to go do something right now.
Exactly. Yeah.
I do think the trade above 18 takes a couple days, but I think momentum could ensue above 18 here.
What I hope is we're talking about Vail next week on Frank's charts, where it's going to close right above that 50 into that 18 break. I would like I would like that if we could get a little bit of time here doing this fight at this level.
I agree. But you better be ready to trigger that on Tuesday. That's
oh,
all I'm saying.
Listen, it doesn't hurt to ask. It hurts to expect.
I do agree. I kind of like, I really wish Lockheed and Raytheon would have held back one day so that we could have put those on the option report picks, but they didn't, right?
They didn't.
Sometimes you got to be ready to trigger on a Wednesday.
You do.
So that's Val. Let's move on. Let's talk a little bit about one of Coach Mark's darlings for a long time now. CNK here, Cinemark Holdings. You know, and Mark, I'm going to give this company a little credit here today. There's no doubt about that. Showing a profit that came in at 5 cents. The expectation was a negative 14 cents. That is a really, really decent beat for Cinemark.
It's symbolic too.
You know what else is symbolic is a revenue number that came in at 666 million. You guys can do the math on that one. The expectation was 597 million, which represented a 578% increase in revenue from a year-over-year perspective. So outside of the jokes on their actual revenue number.
Oh, listen, if you can't sell a naked put on a day where a company reports 666, I don't know when you can. Like,
yeah,
you know,
it's got to be the day, huh?
So listen, Cinemark's company know very well. It is not for the faint of heart, especially with COVID headlines that have been that. But COVID's detracting. The movie slate's strong. Management is one of my favorite management teams in all of the stock market. You gap up, you came down. We've seen that kind of happen lots. It's not an unfrequent thing. Cinemark's going to be a wonderful cash flow stock in 2022. It just is. And the symbolic turning to profit heading into the year in which Top Gun 2 is coming out.
I will be watching Top Gun 2. That's happening.
I will be watching Top Gun 2 on the afternoon. It comes out. I love me Tom Cruise. I love me some Top Gun.
I'm not even afraid to say it. I love Tom Cruise, and I'm
not afraid to say it. I'm not afraid to say it either. I love Tom Cruise.
Tell me a bad movie he had.
You know, I just watched Last Samurai again the other night. I'm Tom Cruise.
It's a good show.
He's addicting to me in movies. So, but no, Cinemark. Listen, it's not for the faint of heart, and you're almost never going to get great technical signals for swing trading.
Me and Frank are like, this is a mark chart.
It's a mark chart, but those puts are juicy.
Works out. It always works out. So
I want to remove the word always.
It always works out.
That is not tackle trading improved language.
I love Cinemark and I love the earnings report.
Yeah, the earnings numbers are good, and Coach Greg, he talks about this, but look at the EPS. Tell the story through EPS, right? You can tell the story of a stock through many different ways, right? Fundamentals, technicals, but tell the story of EPS here. Negative 201, negative 190, 175, negative 119, negative 65, 5 cents. Price really hasn't followed the impressive nature of their fundamentals.
No, and
Right.
you know, we've had, you know, Omicron,
But
Delta.
isn't that where value arguments really play out, Mark? Right. And so I think it's an interesting candidate. You got to like the improving fundamental condition. You're not at those ultimate lows of 14, but I'm not sure you're going to get that anytime soon following a report that showed a positive EPS print. So very choppy, very volatile. But again, a lot of this is market related today, not just Cinemark
and another note, when you hit those lows in the midst of some market volatility, I mean, it did not take long for quick recovery, right? You know,
no, it didn't at all.
You know, it was come down and like, whoop, let's go right back up. You know, and I mentioned in our little Trading Lab Discord this morning thing, I was like, listen, we're fighting the 50. We go back to the 50 weekly. Yeah, like that 50 weekly was just waiting to slap it down this morning, and just you got up there to the penny, got a little slap down. But you're going to hold the 9 here on the weekly. I like it. And I like the company a lot.
As a technician, there's nothing I like about this chart.
Oh no, you're not going to find any prettiness there. Like, no, it's a fundamental value argument.
But again, that's never been your argument, to be clear, though, Chucky. This is a cash flow.
It's a cash flow stock. It is not a directional stock. It is a cash flow stock, kind of like for Cleveland Cliffs for me. I mean, Cleveland Cliffs, Cinemarks, they're cash flow stocks for me. Both that I think represent good value. Both hard to find consistent trends that last more than 4 or 5 days.
Well, there are other earnings to be had here today, but that will be officially it for earnings roundup. We covered Vel, Coinbase, Square, and Mark Darling, Cinemark here today.
I specifically requested Cinemark, so I was happy.
I was not planning on talking about it. No, I kid. I was planning on talking about Cinemark.
You're planning to talk, but yeah, you're glad because of Tom Cruise, right?
Gave you a good reason to shout out Tom Cruise.
I was impressed. I'm going to be like Tom Cruise screaming on. Who did he go on Oprah's? No, it wasn't.
That was Oprah when he was jumping.
No, let's not talk about that, Tom Cruise.
Okay,
because that ruins
that ruins the mood.
Just think about Lex.
That's not the Top Gun Tom Cruise. That's not the Mission Impossible Samurai Tom. Okay.
But just to digress for 1 second, Tom Cruise acting like an idiot on Oprah and some subsequent action led to the comeback, which eventually led to his Les Grossman in Tropic Thunder, which may not have happened without all the idiocy when he was trying to redeem himself. So,
Les Grossman from Tropic Thunder may be Academy Award winning. That was maybe the greatest performance in the history of movie theater. And with that said, we're just going to all agree with what I just said, and we're going to move on to Frank's charts here.
Frank's charts. Listen,
I'm watching Tropic Thunder later today because that might be the funniest movie.
Dude, it's Tom Cruise weekend for me, man. I can't get enough of it. Tom Cruise weekend. Listen, we end every halftime report with, at the end of every week, with one of our most popular segments, Frank Charts, where Frank and Matt bring 3 charts each, and they can be bearish, they can be bullish, and is kind of like a precursor to our little scouting reports that we put out every Saturday. And if you want to check out our scouting reports, have some of the best technical setups you will find anywhere in the world.
That's not reason alone. They have the best technical setups in the market every week.
Reason alone for you to become a pro member. If you're not a pro member, go to tackletrading.com, go to the store tab, sign up for a free 15-day trial to see what I'm talking about. All right, who's going first?
All right, Maddie,
you want? He always gets to pick.
Ooh, listen, I'm going to. You know what? I'm going to go first today.
How garbage it is out there right now.
Yeah, I'm going to go first today.
I like it. I like it, Frankie. What do you got?
This is sparked from our conversation on Lockheed. We're seeing some pretty decent movement in those stocks. It's really tough to go after the GDs and the LMTs right now with just the tremendous movement that they've had. But what about SPR? Another little aerospace and defense company. These guys, I might have brought them up last week in this segment. I can't remember. I know brought them up in a few different places for breakout potential. They didn't break out, which is fine with me. They pulled back with the market. But I think what's happened here in this scenario is, number one, the breakout is still really, really clean. They've got a really clean path past that resistance level to the 200 weekly that's somewhere in the general ballpark of $58. So a nice little window. The breakout still very, very much in play as far as I am concerned. But I also think that this could fit into maybe a scaling into the breakout scenario if I like the overall space, and if I'm interested in maybe getting into one of these defense companies without having to chase quite so much. I think we could probably scale in above today's high with that 58 as our first target. My rule there, probably not much different than yours, Maddie, is risk reward needs to be at least 1-to-1 to that breakout point.
You gotta have an edge, right? If you don't have an edge, everything's dodged. But if you're front running, it's got to be 1-to-1 to the breakout channel, and then it's got to be 2-to-1 on your T2 target.
Exactly. And just using today's candle, kind of today's high, today's low, which would be a fairly traditional way to get into something like this, right? It would also put our stop loss below the 20, not just intraday low. That does put us in a scenario where we're about 1.3-ish, 1.25, depending on exactly how far above and below we're going, with the ATR rule, up into that resistance level, which we really are going to beat the heck out of the 2-to-1 rule, because if you're like me and you think 58 is the target on the breakout, that puts us over 3-to-1 to that 200 weekly at, again, approximately $58, which is where I would be targeting it from a trading point of view. I'd expect a pullback at that point and then, kind of move on from there. But just looking at either the breakout, if I want to kind of be a little bit, little laid back, little conservative.
You're trying to front run into a breakout you really like.
Exactly. In an area that I think can run, we're seeing, some big movement on it right now. Doesn't have to be a front run candidate. Whenever I'm front running a breakout, it's like a third of the position. Nothing too crazy along those lines. So breakout candidate at 58, maybe even a little scaling in if we wanted to be a little more aggressive and get exposure into this industry in the market. Anything you'd add, Maddie?
I'd just say the industry's hot right now, and even if Russia and Ukraine slow down, I still see aerospace and defense doing pretty decent. I think this kind of sparked something there. You're seeing just price action on everything in this space. Let's just take a look at, some of the big dogs out there. Raytheon here, just pounding the table. Obviously we looked at Lockheed Martin earlier today.
General Dynamics,
fantastic. You look at General, right? GD doing absolutely fantastic. One that did potentially stand out to me that maybe hasn't ran too aggressively, maybe gets a little bit of a quick snapback, just in terms of comparison against your front running one on the breakout. Would be the knock. And every time we talk aerospace,
the knock, right?
we were talking about Tom Cruise earlier, the knock list, right? The Mission Impossible. So, anytime we talk aerospace and defense and Tom Cruise in the same halftime report, I'm going to talk about knock. And so I do like knock breaking out of the 410 barrier. This thing isn't necessarily overextended on that weekly breakout there, Frankie. And so I do think knock is something that's on the radar. But if you're looking at something that is more of the a little bit cheaper of a stock, right? A little bit of a cheaper of a stock, and you're looking at something you can maybe get into from a front running perspective. I like the Spirit breakout here potential. It's obviously isn't showing the strength that say a Lockheed or a NOC or a GD is showing here today. But this has been a reversal analysis in SPR. It's and you're looking at a resistance level at 52.5 that is pretty consistent throughout the past year or so. I think Russell 2000 type consistency against that neutral pattern on SPR. A breakout here, I don't know. A lot of things do exist, but technically this thing feels like 58. It just feels like 58. And so I like I personally like knock a little bit more. And then obviously you're waiting on GD and you're waiting on Lockheed, you're waiting on, our Raytheon. But from an active trader perspective, I feel knock breaking out on the weekly chart, more position style there makes some sense. SPR front running coming into that 52.5, 53 breakout. That makes some sense. And specifically on SPR, knock's not going to run 10% like SPR will. SPR will move a little bit.
Right. It has those
faster.
personality traits, right?
Yeah. And so if you're looking at it from a swing trader's perspective, I definitely like SPR in the front running status with the potential break of 52.5 by 53, a little bit more than I like a swing trade on knock. If you're looking at position, I like knock.
Yeah, makes sense.
Yeah.
Yeah, no,
Mark?
SPR was one of my pandemic stocks that, when I dove into the company and everything, in the midst of the pandemic, I did a lot of plays on SPR. So I know the company pretty good. Like the technical setup, like the range. So
What am I going to do? Let's go with, since this was one of Mark's stocks that he liked, let me go with another Mark stock that he once liked. And let's see if I can get him on it, liking it again. Let's go to Penn National Gaming here. Penn had a decent earnings report this quarter. We're tracking Penn through reversal analysis, and what I got this as is a head and shoulders reversal candidate. I think everybody and their dog's going to like a lot of reversals over the next couple months there, Mark and Frank. And Penn National Gaming has shown me a pretty consistent reversal formation. And let me draw some lines for you. Let me get my epic pen here. First and foremost, that is the left shoulder. That is the head. And that is the right shoulder. Now,
the only thing missing from there,
very consistent.
The only thing missing from that was, here is my handle, here is my sprout.
You want to finish?
I'm good, but I'm good and happy.
All right. Now to draw, when you're doing a head and shoulders, okay, ultimately the head and the shoulders shows you the entire reversal conversation because you have slowing momentum, you have double bottom analysis. Now you're looking at what is called the neckline. Now, when you're drawing a neckline, you can draw a vertical neckline or a horizontal neckline. Personally, I like horizontal necklines. You see that horizontal neckline there? That gives you a very clean reversal confirmation. And so I got Penn National Gaming as a reversal candidate with a head and shoulders formation. I got this as a resistance level, and this can be a little bit debated on the reversal handle, but I'm going to put it right there in the 52.5, Frankie, is where I'm going to kind of put that 52.5, maybe even 53. Frankie, in terms of if you wanted to, be a little bit more confirmation. What I like about this one, though, is it's a pretty consistent reversal on the backs of a pretty decent earnings report. And with confirmation, it might take a little bit of time. We're only talking about $50. And I do think there could be some front running here, but ultimately I'm just going to talk about the breakout. In terms of the breakout, what I like about the breakout is I like the fact that upon the breakout, there's not a lot to stop it. It opens up pretty aggressively. And that you got to like as the active trader, where unlike the nastiness we're seeing in the S&P, right? You look at the S&P, it breaks one level of resistance. You're staring at a million other levels of resistance right now. It's hard to project on that. On Penn National Gaming here, let me take off my reversal analysis there. Give me 1 second. On Penn National Gaming, it opens up there. You come out to the weekly chart here. You are kissing off old resistance right there at 40. $40 was the pandemic high before the pandemic. So right before the pandemic hit, $40 was that level. You see the pandemic hit, comes right back down, worked all the way back up. Look at $40 here. Look at $40. Stop that price appreciation. Look at the earnings report. Look at the breakout. That breakout, look at the volatility build off of that. That shows you the importance of the $40 breakout. Then this massive bearish downtrend starts working its way down. And where do we start to see reversal analysis? Low point of the head was right there at $40. It's coming in line with the body, with the left shoulder and the right shoulder, right at the 200 weekly. Now we're looking at reclaiming a 20-period weekly moving average right at 53. I think if we reclaim 53, there's a foundation of support underneath 53. You reclaim 53, 52 and a half, 53, you're reclaiming the 20 period moving average, and you see that same openness. It opens back up on the weekly chart. You come back to the daily chart. Once again, it opens up there. I think we got clean air. I think we got a clean reversal candidate. What do you think?
Yeah, I mean,
yeah, absolutely.
Yeah, everything's spot on. You got a nice moving average pocket into the $60 marker. And while you don't need to do this, Maddie, if you do look at the monthly chart, it's sitting right on that monthly 50 inside candle with just a very short amount of time left to go on the month. Really like
50
it.
weekly.
Really like these guys. I think monthly. It always it just is going to come down, which is always fine, I think, because we all want the traders to be out there seeing the same patterns that we are, right? I don't want Mark to be selling while I'm buying because he's having a negative impact on me, right? So I think the only real nuance here, because I think the technicals and the pattern are just pretty much, spot on. It's just how do you get in? Where exactly is it? The 52 to the 53, the 20 weekly? What do you need to see break? But I really do like that little window from, approximately 53 to 60. Love the pattern. Really like this one, Maddie.
And again, for every trader, they're gonna select the strategies they trade. They're gonna select the stop loss placements they trade. I like this as a pure reversal candidate. No creative options. I'd like this as a pure reversal candidate.
I would agree with that. That's a very nice selection. I like it. I wish I would have went with them first because you probably weren't going with SPR. But you snooze, you lose, right?
I was not going with SPR. I was thinking knock though. Like I was looking at aerospace just like you were today, and I'm sure many other traders were looking at aerospace here today. And I mean, it was just the Lockheed GD and Raytheon examples were just skyrocketing, and it was like, wow, those are really good breakouts that lots of people missed. Where's that secondary analysis? You know what I mean? Where's that secondary? And I did see Spirit. I like the front running analysis on Spirit. I like knock from a position perspective, and maybe you wait on a little bit of consolidation on Lockheed, Raytheon, and GD. But again, I like this. I like the industry. Penn's more of a traditional reversal.
Yeah, for sure. Yeah.
What's your go next?
All right. Next up on the menu, I think I am going to go with a similar type of analysis, and that's VRNS. VRNS. Verona Systems.
Okay, I see a little bit more of a V-shaped bear stop out type.
Little bit of a bear stop out. So a couple things going on with these guys. If you go back in time, a whopping 2 weeks.
I just want to show the bear stop out where that would be.
Yeah, that would right in there. A couple of weeks ago, I was looking at this as a potential 950 pinch, right? And then the market happened. And well, that went away. But we did hold up. And as you can see here on this weekly chart, held the 200 weekly, and have also put in a higher low on that, and threatening at that bear stop out point, which would be also the bull breakout point, right? That would get us above the 9 on that weekly, obviously above resistance, and taking out that 50-day simple moving average as well. So we've got the higher lows, we've got the original failure at resistance, makes sense. Buyers come back in, pretty clean entry. I know how I want to get in. I need to, I get through a lot of stuff if I can break out those highs from a couple of weeks ago, right? If I can get above, 42, I believe. I've broken a lot of stuff. And we might not. That stuff's hard to break, right? That's a pretty decent little layer right on top of where we are. But you do have that curling 20-day simple moving average kind of propping us up potentially as a support catalyst along the way. If we can break through that resistance level, you do have a fairly clear path. You got another one of those moving average pocket type of scenarios where you're running into the 20 weekly at around $49-ish, give or take, probably a little bit below that. And you have some old junk in there as well. These guys have
a lot of resistance, a lot of 49.50.
Yeah, there's a lot of junk, but nothing that scares me, right? Until you get into that zone, right? As we kind of get into that 48, 49, where I've got that 20, where I've got a little bit of junk from days gone by. I think that's a very sensible, at least first targeting location, if not, the swing targeting location, depending on how you want to approach it. If you're a little more patient, willing to do a pullback, maybe there's a little more upside beyond that, but just a little bit of a breakout. Ideally, my stop loss will be below the 9 EMA when that breakout occurs. Today, that might be a little trouble from a risk reward point of view, trying to get up into that 49 range. But if, say, 2 days go by, probably isn't, right? If 2 days go by and we break out, that 9 EMA will be increasing. We'll probably have a new higher low that can act as a little bit of a stop loss location to kind of go along with that as well. So very similar in the kind of reversal style, a little bit of a different reversal look, but same general type of feel as Penn.
The only question I would have is triggering mechanism, right? I think you got the zone from about 43 to about 44. You can aggressively get in above 42.60, I think, Frankie. Yeah, I think that's the top of last week.
Okay. Yeah. So
I think aggressive, you can get in above the top of last week, conservative above kind of the range here, the body there. I don't see any resistance until you really work up into that 49.50 level. It's more aggressive than the Penn, right?
I would agree.
This is more of think about this as more of a V shape, right? Whereas remember, and this just kind of helps me when I'm kind of breaking it down here. Just give me 1 second. Let me come there. So when you're looking at those traditional reversal analysis, you have the traditional W formation, correct?
Yep.
You have the head and shoulders formation, correct?
Yep.
And then you have the deep retracement V-shaped one. And so basically what I'm tracking on Penn is the middle one, and what you're tracking on Veronis is this one on the right hand side, right? And so basically that's just in general what your three primary reversal candidates are. And so when we're looking at that, give me 1 second, let me take my Epic pen off. VRNS here. When you're looking at that, you see this scenario, and let me paint it, right? You have the deep retracement, and the deep retracement has always got to get above that 20 period, right? You got to get above the 20. You got to start working your way up a little bit deeper in terms of the retracement. That allows the market to establish a higher level of support going into that same breakout channel. And so you're tracking VRNS as more of a V-shaped bear stop out right above that channel, trade the momentum, Penn, more of the head and shoulders. I don't have a problem with it. I think it's technically consistent. Personally, I like the Penn reversal slightly more just because of how it opens up, and it's not as
it's been longer developing too, right? So it's
exactly
had a more natural feel.
100%, Frankie, 100%. But if you're looking at V-shape, this is what it does look like. This is what it does look like. And the only thing you're waiting on is the breakout.
Yeah. Mark, anything you'd like to add?
No, listen, you guys can bring me all these reversal pattern, beautiful consolidation breakouts.
Just wait for the next month.
I mean, this is my kind of I don't have to chase momentum. I get these nice, pretty stabilized.
I got a momentum one for you next. That's fantastic.
Okay, well, way to spoil my Tom Cruise weekend party.
All right, I won't spoil your Tom Cruise weekend. What I'm going to go to though, I'm going to whet your appetite a little bit more with reversal analysis, Mark. I'm going to give you what you were asking for, and I'm going to bring you Albertsons.
Good old Albertsons.
Boring. Say it with me.
Boring.
Albertsons. Now, what I like about Albertsons here, again, another little bit.
How is Frank not bringing up Albertsons?
We debated it.
Yeah,
we did. I should have fought harder for it.
First.
He did. I should have fought harder for it.
So me and Frankie had like a 3-minute little prep conversation right before we got going here today. And He's like, what are you doing? I'm like, well, I don't know. I got a couple staples. He's like, what staples do you got? I'm like, I got Albertsons. That's what I got, Frank.
He did. He said it's that fast too. Like just to make sure I didn't have a chance to.
I was Russia claiming territory.
Yeah, he was quick on it for sure.
I was quick on it. Here's what I like about it, and Frankie knows this already. $30. What is $30 to us, Frankie?
$30 is a beautiful number.
Beautiful, significant whole number, isn't it?
It sure seems to be. Maybe 30, it's all mental, but it sure seems to be.
It might just be mental in you and I, but I see it play out a lot. I've said 30 is the new 20 before. I'll say it again. I like $30. I do see $30 act as a significant whole number more times than say $40 or 60 or 70 or whatever the case might be. Obviously, the most significant ones are the ones that track currency denominations, 5, 10, 20, 50, and 100. But $30, it's here tracking right against the $30 handle. And when you're looking at this from a intraday perspective, $30, you see that wick. Look at that wick. Oh, Frankie, look at that cash open.
Yeah,
that cash open was strong. And what stopped it? $30. What's it working into? What's stopping it? $30.
30.
What happens if it breaks 30? It now acts as a support level. The same way it is currently acting as a resistance level. And so I think the trigger here is what really stands out, triggering above $30. This, and Albertsons isn't necessarily a swing trading stock, more of a position style here. But what I like about it to even before the $30 break here, I like the increasing support level that is tracking very consistent against the 200-day moving average.
Mm-hmm.
It's not a difficult assessment. I don't need to draw some lines. I don't need to talk about the 3 styles of reversal characteristics. The 200-day moving average has had a double bottom with confirmation. You've reclaimed all your moving averages, the 20, the 50, the 200, and now you're looking at a trigger above 30 with an easy stepping up the ladder to 32, and then obviously it's 34. Then we're walking up into the all-time high. I like Albertsons here, and I like it as an ad from a position perspective. Frankie, what do you say?
I love Albertsons as a company. I love where it is. I love that close of the 50. I'm assuming at this point in time, but barring some weird turnaround, we are going to close that. Absolutely. I do think you nailed it right on the head. I think it is more of a position than a swing trade. Although every now and then, Albertsons can.
It can fly. Listen, if Albertsons wants to act like a tech stock in this breakout of 30, be my guest. I'm not
happy with it.
No.
Yes, I would be happy with it 100%.
Don't get me wrong. That position trade can act like a swing trade if
that's what it wants to do. I am more than happy to accommodate. But yeah, I am with you. I really do like Albertsons. I really like this close here. I remember, a couple of weeks ago, Greg brought him up in the Trade Masters webinar. I think you were with me in the chat. Like, the only reason I'm gonna not vote for Greg is because he was pitching a covered call instead of going directional. So I have a little bit of bias when it comes to Albertsons, but I really like that selection.
I think after I discussed Albertsons, Frank's going to go help the revenue stream by shopping at Albertsons today.
I might. I think that's a bold statement. I like Albertsons, but I don't like
the house today.
I don't like Albertsons that much.
There you go, buddy.
I like that chart, though. I mean,
I like the chart too.
Yeah,
like
very nice looking chart.
All right, Frankie, you got one more?
I got one more, and I'm debating between two.
Ooh, let's look at them both. Let me help you.
All right, so I'm looking at a deeper pullback here on VRTX.
Okay.
Pulled back into the 50 and the 9 weekly. Going to be a really decent little pullback, particularly on the weekly.
Much prettier on the weekly chart than it is on the daily. Yes.
But let me paint you a picture, Maddie. We are talking next week, and we kind of run up into the 20 and get pushed down maybe a bar or two. Then we're pushing back into the 20 next week, and we're taking out that high from the 16th at 237, we'll call it. Can't you see that picture?
I can see it. I can see the scenario, but again, you're talking about 2 pivots in the future.
Oh, listen, there's only 2 pivots in this market. Come on now.
That's 3 days at this speed. Okay. What's your other one? Let me take a look.
My other one is another reversal on CHGG.
CHGG. Personally, if you want my advice, I would say the reversal has a much better chance of getting a passable grade. There's some volatility in that pharmaceutical play.
Sure, there absolutely is. That's the good and the
I
bad.
do like the weekly chart, though.
The weekly's looking really, really nice. All right, we'll go with CH Greg. We'll go out with CH Greg. So
I just like that. I do like the increasing support right against the cluster of every moving
Oh, sure.
average.
Yeah.
You know what I mean?
Just a disastrous earnings a few quarters ago, right? Back in November. I mean, just an absolute nightmare of a
misses
situation.
and guidance everywhere.
And I mean, that's just what happens, right? When you miss like that, it's going to be most likely a while before anybody has any faith in you whatsoever. And these are just the very beginnings of maybe I do have some faith in you. I mean, the nice thing about being beat up so badly is there's a lot of room to go to the upside, right? Bad side is there's lots of battles along the way. What I like about these guys right now is you kind of have that very clean retracement, as you notice, into that cluster of moving averages, and then that big fire back yesterday, arguably at least taking out the intraday or very short-term downward trend line, and then a nice little inside candle at the top end here today. So as opposed to getting rocking and rolling and blowing up like a lot of things in the market are today, it's taken a little bit of a breather. It did come down and test that 9 EMA, use that as a springboard. What that does is that gives me a legitimate stop loss location. It gives me some faith and saying, hey, you know what? You can put your stop loss below today's low because we've seen some price action off of that. Whereas, if we're talking about this yesterday, I'm like, well, you kind of got to go down below 27.50 for a stop loss realistically.
But I also like where that stopped today.
Absolutely.
Right? To help with that stop loss placement, because if you're going all the way down to the low prices at 27.5, you're just taking too much risk for this trade.
You're just not going to make it work, right?
Look at the old resistance from the last couple of days, and the volatility hits today. It stops on a dime right where the old resistance level was. It works back, and look at the cleanliness up at the top. Look at the cleanliness right there at about 30.80. You got to like that as a potential trigger.
Absolutely. A really nice, easy entry type of methodology.
I honestly think it's a cheap risk.
I think it's a really cheap risk type of a trade.
Tight stop. There's 30% chance it works out for a potential home run.
So, and the thing is, if you think about these guys, there's only one real significant challenge, in my opinion, in the short term, above where we currently are, and that's that 20 weekly that's not too far above us. I like that as a first target, or even an additional, scale in type of a location, because I think you should respect that average at all times, even when it's inconvenient for you. But beyond that,
that's working right towards the tops of last week as well, Frankie, right there in that 33 level.
Exactly. So it should give us, some good momentum. If we can push through that, we're breaking resistance, breaking the 20. We've got a pretty good room to run. I mean, there's just no real price action until 40, right? Or 39.50, the top of that gap. Obviously, if we fill that gap, I think that's very naturally a place to look for some profit, locking in some profits. But I think you're right. I think this is one of those where you've got good development, relatively cheap risk, high upside. Maybe it works, maybe it doesn't, but there is a good return if it does work. If this does work, you're probably looking at a 5-to-1 type of a trade. Does this work out, 20% of the time? I guess that's up to you and your systems to decide.
Yeah. I think it's one of those ones, if you're looking for a potential, home run type.
It's a profitability. It's not a probability. It's a profitability trade setup, right?
Yes. You have an edge to 33. You don't have an edge above that. And so I think you're easily, you have that edge to 33. Above 33, I think it's more challenging because of that 20 weeklies right there. And obviously there's a pivot point there from 2 weeks ago. But I like it here, Frankie. And I do like that stop loss placement. Again, in a perfect world where we're not dealing with Russian volatility, you would love that stop loss underneath 27.5, but we're dealing with volatility here. So I do like it. It's aggressive, but I do like it.
So, yeah. And even if you don't like this particular one, if it's just a little too aggressive too soon, I definitely think this is worth keeping in a watch list to see what happens if and when we do close above that 20, because we've got some huge moving average pockets that we can work with if we can win that battle.
Well, let me say this. If you don't like that one, you're going to like a lot of the other reversals we put on those watch lists over the next month or so.
Yeah. There's going to be plenty of options.
Yeah. All right, my last one here. I am going to go with a darling of Tackle 25, a darling of tackle trading.
Beautiful.
FCX. Now, what I like about FCX here is obviously a breakout potential here. It's very, very choppy. We're going to smooth this out. We're going to look at that weekly chart here. You're kissing up against some very, very important resistance levels for FCX that has played a role in stopping price discovery for the better part of the last year. You've had multiple attempts to break out of this channel right there at about 40, 46.20. You can see the top of the wick. I think that is a perfect number to kind of work off of on the weekly chart, but you're kissing up against a very, very major level of resistance, which if broken should see some price appreciation here. Now, coming back to the daily chart, you are a little bit overextended on the daily chart here. I like this above the resistance channel. It's a weekly breakout type trade. Obviously, FCX is something many in tackle trading love covered calls on, love investing in. It is that copper play for a lot of market participants. And I'm just going to make this very, very simple. It's coming into a very important breakout channel. It has swing trade written on it. It has position trade written on it. It has a lot of different cash flow systems written all over it. I'll leave that up to the trader to decide the type of strategy that is best for FCX, because FCX is one of those stocks that swing traders will love when it's consistent. Cash flow traders love all the time. It's obviously a cash flow darling, as we've stated. But again, this is just a very simple breakout on the weekly chart on a company that is very important for copper in general, basic materials, and it's a leader in that space right now. So I got FCX on the breakout. Chucky and Frank, what do you think?
Yeah, I mean, I like this one. I did this one for my Frank's chart for Tackle Trading Twitter yesterday. Because of the pretty much everything you pointed out. We talked a little bit about maybe front running it. Obviously, that was then.
That front running is up already.
That was then.
Yeah.
This is now, right?
Yeah. We've had that 5% front running already. Now we're talking the breakout.
Now we're at the breakout point, and I like it. I think there's a couple of things that you can think about from a targeting point of view. For me, I don't know. You probably are going to agree with this one, Maddie. A $50 target
50.
kind of for the swing trade.
Yeah.
It seems like if we can break this 50, doesn't seem like it's a tough gig.
Feels like a pretty quick journey to 50.
It feels like a pretty quick journey to that point. And I'm actually kind of looking at this as a little cup and handle over the course of this calendar year, right?
Yeah.
And so I think that more position, aggressive style leads me to believe these guys are getting up into that 56, 57 range if we can actually break out. I mean, it's tough to break out, right? I like its chances, but that's all that they are until it has broken out. But yeah, I really do like this as a breakout candidate. Beautiful weekly chart. Favorite for a reason. There's a reason all of us here at Tackle Trading like to trade FCX, right? It tends to treat us pretty good. So yeah, I'm 100% on board.
Yeah, and specifically over time. I have a philosophy on FCX on breakouts very similar to other, like when AMD sets up in a breakout, I love it. It doesn't work out all the time.
No, but that doesn't mean you don't love it all the time.
That doesn't mean I don't love it.
It's like me. Sometimes I disappoint you, but you still love me all the time.
I love you all the time.
Exactly.
All the time. Yeah, all the time. So does everybody at Tackle. They love you all the time.
They just don't get enough of me then.
Yeah, me and Mark, they can take every now and then. You all the time. I kid.
All right, Mark, anything you add?
Frank is our Tom Cruise.
I don't know if that's
I don't think that's the analogy I think about.
I've never,
someone's got to be our Tom Cruise. I need me some Tom Cruise.
I don't know if we have Tom Cruise.
Tom
Cruise jumps out of airplanes.
Listen, the thing I love, the team at Tackle Trading is about to dive into hours and hours of this analysis with a little more candid language and a little more sarcasm than the fine presentation Matt and Frank just had on Frank's charts. But you can check out all our hard work on the scattering reports this weekend. Listen, it has not been boring this weekend. And once again, my final thoughts heading into the weekend is in your prayers, in your thoughts, in your spirit, whatever you do, people in Ukraine right now, please put them in that. And if there are others, I'm sure there are going to be humanitarian causes pop up. You're going to start seeing websites. Donate some of that money. Donate your thoughts, your money, whatever. You're going to start seeing those pop up everywhere because there's going to be refugees and there's real panic. Because I mean, I can't even imagine, right? So
scary.
your thoughts, your prayers, your energy, your money, help those individuals out. Matt, Frank, thoughts heading into the weekend?
Same thoughts, Mark.
Yeah.
It's been a tough week in the market. It's a lot tougher week for the Ukrainians, and I think we should all keep them in our hearts, our thoughts, our prayers, and hopefully for a peaceful resolution out of Ukraine. Hopefully for some de-escalation. Hopefully we get some diplomacy here, because this is very, very, very volatile and sad situation happening right now.
Yes, it is.
Yeah.
And quite frankly, an unneeded one.
Out of the many things I was reading this morning, I saw this little report where they're urging Ukrainian citizens to create Molotov cocktails in order to fight. I was just like, my God, I can't even imagine.
From 16 to 60, Ukrainians are not allowed, male Ukrainians are not allowed to leave the country, and to being asked to get into the reserves.
And if I was there, I would be there, and I would be fighting, and I would be fighting for freedom, because that is the human spirit, that is the human nature.
Think about us as Americans. If somebody threatens our democracy, what we would do.
No, it is. I mean, that is the nature of the human spirit. And,
they're fighting for democracy. Guys.
Russia can go straight to hell, and Ukraine, we're with you. We're with you. We're with you 100%. And, may God bless everyone. God, I'm going to get teary-eyed.
Well, I mean, Russia, I have mixed feelings there. Vladimir Putin.
Yeah, not Russia, not the people. Yeah. The oligarchs. And,
I saw something out of Russia yesterday that I hadn't seen in decades. And if you can only look back in history, there were people marching in cities across Russia for peaceful demonstration.
Oh, I've seen the youthful.
That doesn't happen in Russia.
And
there was a time in 1968 when there were 8 individuals marched in Moscow, basically working towards peace. These people were, as you might understand, taken and sent somewhere else. That sparked other people. The things we're seeing out of some communities in Russia is inspiring.
I've seen reports
out of the
young
Ukrainian people, though, what we are seeing out of the Ukrainian spirit and the Ukrainian people is it's sad, but it's also inspiring to see people fight for what they believe in, fight for democracy, fight for freedom. These are things that we in America have studied historically in reverence.
Yeah.
That we put people in American history who have done these same things in reverence. Our thoughts, our prayers, our help, our support, it's needed for the Ukrainian people. There's no doubt about it. And a little goes a long way. It does.
Absolutely. Listen, we love you, Tackle Trading.
Love you, Tackle.
We're going to get into our meetings, do our best job to give you the best analysis on the newsletter. Gino does such a good job and on our scouting reports. But we'll be back Monday, and hopefully the world is a little more settled, and whatever the
market can happen in geopolitical situations over a 72-hour period. Guys, stay with us. If you need anything from us, you can hit us up in Discord, hit us up at Team at Tackle. And we'll obviously have great scouting reports out for the weekend, have a nice updated newsletter that Gino puts together up through the weekend as well. And then we'll be back with you guys on Monday to break down all the price action and all the activity that we see over the weekend as well. Stay great.